Good morning and welcome back to Dark Gamma Pre-Market Analysis. I'm Samantha. It is Sunday, May 11th, and we are coming in essentially flat this morning with the SP 500 sitting at 7,394.7, just about 4 points below Friday's close of 7,398.93. A very tight bearish gap of roughly 0.06% to open the week, which tells us the market is in a cautious wait-and-see posture right out of the gate.
That's right, Samantha. That gap is practically a non-event in terms of raw points, but what matters here is context. We are sitting well above max pain at 7,250, which means there is meaningful downside gravitational pull from a dark gamma perspective. The options market is anchoring that level hard, and with the SP 500 trading nearly 145 points above it, any softness today could see that gravitational force start to assert itself as we move through the session.
And let's talk about the expected move for today's session. The options market is pricing in a range of 7,363.2 on the downside, all the way up to 7,434.6 on the upside. That is a plus or minus 35.7 point band. Right now, we are sitting right in the middle of that range, which gives the market room to breathe in either direction. The key question is whether buyers have the conviction to push toward the upper end or whether we drift toward that lower boundary.
The sector picture is really telling the story this morning, Samantha. Energy is the clear standout, leading with gains of 1.24%, which suggests some commodity tailwinds and rotation into defensive real assets. On the other end of the spectrum, communications is getting hit hard, down 2.13%. That is a significant drag, especially when you layer in the Magnificent 7 weakness. Meta is off 0.42%. Alphabet is lower by 0.76%. Both heavy communications-linked names, and that pressure is broad across the group.
Exactly. And looking across the full Magnificent 7 lineup, the weakness is widespread. Tesla is the laggard, off 0.92%. Nvidia down 0.78%, Microsoft down 0.65%, and Amazon sliding 0.55%. Apple is the lone relative bright spot with a modest gain of 0.23%, but that is hardly enough to offset the collective headwind those names represent for the broader index.
So the setup for today is this. We have a flat open, max pain sitting well below current price. The expected range clearly defined, and sector rotation favoring energy over growth and communications. The gamma exposure landscape is going to be critical as we approach key strikes. Watch for any acceleration through 7,363.2 to the downside, because a break of the lower expected move boundary often triggers faster price discovery as dealer hedging kicks in.
Well said, Billy. Bottom line for the Dark Gamma community this morning, respect that max pain level at 7,250 as your longer-term gravitational anchor. Trade within the expected range of 7,363 to 7,434 with discipline, and keep a close eye on energy as your leading sector and communications as your tell for risk-off sentiment. Stay sharp, stay data-driven, and we will see you in the next update. On today's macro calendar, the main event is existing home sales at 10:00 a.m., consensus 4,100,000, previous 4 million.
These releases could drive volatility at the S&P 500 open.
Pressure is the word for the Magnificent 7 this morning, with 6 of the 7 trading in the red ahead of the open, and the group broadly signaling a cautious tone for big tech. Apple is the lone standout, edging up about 0.25% to $293.60, while the rest of the cohort is pulling back from last Friday's close.
Tesla is leading the declines, off nearly 1% to $424.17, with Nvidia close behind, dropping roughly 0.75% to $213.31. Both names feeling the weight of risk-off sentiment. Alphabet is also among the weaker performers, sliding about 0.75% as geopolitical uncertainty keeps growth-sensitive tech under pressure.
That geopolitical angle is worth watching. Reports of Iran and Saudi Arabia's foreign ministers discussing Tehran-U.S. diplomacy are adding a layer of macro uncertainty that tends to weigh on momentum. Names like Nvidia and Tesla first. Microsoft and Meta are softer, but holding relatively tighter losses, down about 0.6 and 0.4%, respectively, suggesting some differentiation within the group.
Overall, the tape reads defensive for large-cap tech this morning, with Apple's resilience being the one bright spot, but not enough to lift the broader cohort. Traders will want to watch whether these pre-market losses deepen at the open, or whether dip buyers step in to defend key levels in names like Nvidia and Amazon.
4 sessions worth of earnings are hitting the tape starting this morning, and Constellation Energy leads the pre-market wave with a staggering expected move of 36.5% on a $109.9 billion utilities giant. That beta of 1.47 makes this unusually reactive for a utilities name, so options desks will be watching gamma exposure around the print carefully.
Barrick Gold and Circle Internet Group also report pre-market, both carrying expected moves above 26%, which keeps volatility elevated across the session. Then after the close, Simon Property Group is the cap leader at $65.7 billion, but its expected move is just 2.3% with a beta of 0.60, so the market is pricing this as a very contained real estate event.
Tomorrow morning, C Limited dominates with a 50.5% expected move on a $49 billion communication services name. And that 1.47 beta suggests it will pull the SP 500 futures if the number surprises either way. JD.com and QEnity Electronics round out the pre-market slate with moves of 19.2 and 4.9% respectively.
Closing out tomorrow after hours, Oklo is the wild card at 57.9% expected move with a beta of 3.45, though its 12.6 billion cap limits broad market contagion. Franco-Nevada and Nextracker are far tamer prints, so the real overnight risk to monitor is Oklo open interest positioning given how violently that name can reprice.
If tensions soften, we may see crude pull back, which historically drags energy sector names lower at the open and gives a modest lift to consumer discretionary through lower input costs.
Dealers are already sitting on elevated gamma exposure near key strike levels, so any shock from that meeting could amplify intraday moves significantly.
Watch open interest clustering in financial sector options around current price levels, as 0 days to expiration traders could pile in quickly if the sector gaps up on that news.
Expect lighter conviction in the first 30 minutes as participants wait for any headlines out of the Besant talks before committing to directional exposure on the SP 500.
Zeroing in on the ESP 500 with spot at 7,394. The 7,500 call is your nearest overhead strike with 13,874 contracts and open interest surging 121.45% overnight. That kind of fresh positioning makes 7,500 a firm resistance ceiling heading into the session.
On the put side, the nearest strike is 7,270 with 9,035 contracts and an eye-popping 1,124.25% day-over-day open interest jump. That explosive build suggests traders are aggressively hedging a potential flush toward max pain at 7,250, making that zone a critical support cluster.
Worth flagging that the 7,570 call saw an almost unreal 20,863% open interest change, adding 9,597 contracts essentially from scratch, which could indicate a large single-day speculative position or a structured spread being layered in above current resistance. Gamma exposure around 7,500 is likely getting dense and could act as a magnet or a wall, depending on how dealers hedge.
With put-to-call ratios running above 1.69 across all 3 near-term expiries and the bulk of open interest skewed heavily toward puts, the market structure leans defensively hedged, implying that 7,250 to 7,270 is where dealer support likely firms up, while 7,500 caps the upside, unless that call wall gets absorbed.
Diving straight into the levels, the gamma flip at 7,257.2 is the price where dealer hedging switches from stabilizing the market to amplifying moves. Since spot is sitting at 7,394.7, we are well above that flip level, meaning dealers are in positive gamma territory and will be selling into rallies and buying dips to stay hedged.
Right, and that positive gamma behavior tends to compress intraday ranges, acting like a magnet keeping price contained. The call wall at 7,400 is the strike with the heaviest call open interest, where dealer short gamma exposure creates a ceiling that is very hard to break through.
The put wall at 7,370 is your downside anchor. Heavy put open interest there means dealers will defend that level aggressively by buying the SP 500 as it falls toward it. With spot at 7,394.7, we are essentially sandwiched between the put wall below and the call wall just 10 points above.
That 10-point range between spot and the call wall tells you the open is set up for a grind with very limited upside unless a catalyst forces a breakout above 7,400 and triggers a short covering squeeze. Watch 0 days to expiration gamma exposure closely at the open because a breach of 7,400 could flip dealer hedging flows and accelerate the move sharply higher.
Tracking institutional footprints. The dominant liquidity level over the past year is unavailable.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,370 level, below current price, with maximum liquidity concentration over 3 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,395, above the gamma flip at 7,257.
1 sigma range, 68% probability, goes from 7,363 to 7,435. 2 sigma, 95%, extends from 7,328 to 7,470.
On the GX side, call wall sits at 7,400, structural resistance. Put wall at 7,370 is where dealers become forced buyers.
The top institutional whale levels nearby are: these are the highest liquidity concentrations in the market. Expect reactions there.
This is a new section we're introducing today, Daily Institutional Positioning Tracking. Each morning, we'll scan the options market for large institutional bets and follow them day by day.
Today, there are no new signals to report, but we'll be tracking this daily so you can see how institutional money moves over time.
No institutional contract to highlight today. As we build this daily tracking, you'll start seeing the most interesting positions appear here each morning.
Come back tomorrow. This section grows more valuable as we accumulate days of institutional flow data.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.